So, what's going on in the markets this week? Well, it's basically a massive global tug-of-war. You've got these incredibly powerful economic forces pulling in completely opposite directions, and we're here to figure out who's got the edge.
Okay, so at the very center of this whole thing, you've got the world's two most powerful central banks. And get this, they're taking starkly different paths. The US Fed is getting ready to cut rates, while the European Central Bank is holding firm. This one disagreement is setting the stage for everything else that's about to happen.
All right, here's the game plan for how we'll track all this action. We'll start with the Fed's expected rate cut, then hop over to the ECB's steady-as-she-goes approach. After that, we'll check in on some crucial economic signals from China, see how this all is hitting the crypto market, and then, we'll pull it all together at the end.
Let's kick things off with the main event in the United States, the Federal Reserve's policy meeting. Honestly, this is the one decision that every single trader and investor has had circled on their calendar for weeks.
Pretty much everyone is expecting a 25 basis point rate cut. I mean, the market is pricing in something like an 83 to 99% chance, so it's almost a done deal. Now, a basis point is just 1/100th of a percentage point, so it's a small move, but it is a significant move. It's the first cut we've seen since last December and signals a major pivot in policy.
So why the big change of heart all of a sudden? Well, it's all being driven by data showing the American job market is cooling off, maybe even faster than expected. With inflation calming down a bit, the Fed's focus seems to be tilting from just fighting price hikes to now also protecting jobs and making sure the economy keeps growing.
But here's the really interesting part. The rate cut itself, kind of old news. The market's already baked that in. The real drama, the real action, is going to be in something called the dot plot. You can think of it like the Fed's secret map. It shows where every single voting member thinks interest rates are headed. This is what's really going to move the markets.
And of course, everyone is going to be hanging on every single syllable from Fed Chair Jerome Powell. The smart money is betting he'll use cautious language, something like proceeding carefully. And really, that's code for, hey, we're doing this cut now, but don't assume a whole bunch more are coming. It's all about keeping their options open for the future.
Okay, so as the Fed is getting ready to ease up, the story across the Atlantic couldn't be more different. The European Central Bank is playing an entirely different game right now.
Yeah, just last week, the ECB decided to hold its key interest rate steady at 2%. Their reasoning? They basically see inflation as largely under control, and they view the Eurozone economy as surprisingly resilient, even with everything going on in the world.
Now, ECB President Christine Lagarde is set to speak a few times this week, and you can bet analysts will be listening for clues on three key things: the new growth forecasts, whether their current policy is actually working, and, this is a big one, any comments on the very sensitive topic of France's tricky financial situation, which is a known risk for the entire region.
So with the two major Western economies pulling in opposite directions, the global manufacturing powerhouse, China, is about to release a batch of data that could honestly tip the scales for everyone.
This data is a vital health check for the world's second-largest economy. While the forecasts for production and retail sales show a little bit of optimism, that expected slowdown in fixed asset investment is a point of concern. Any big miss on these numbers could send ripples across global markets, fueling fears of a much broader slowdown.
All right, this push and pull of global forces is creating a fascinating battleground in the digital asset space. While crypto is obviously influenced by these big macro trends, the market is also caught in its own very unique tug-of-war this week.
A massive headwind is forming on the horizon. This month, an estimated $4.5 billion worth of crypto tokens, which were previously locked away, are scheduled to be released onto the open market. That is a potential supply shock of an enormous scale.
And we're not just talking about one obscure project here. We're talking about several major players. Big names like Sui, Aptos, and Arbitrum are all set to release a significant new supply of tokens. For the markets, this creates a huge question. Is there enough demand out there to absorb it all?
This just puts the crypto market's dilemma into perfect focus. On one hand, you've got this powerful tailwind. The Fed cutting rates makes capital cheaper, which is usually great for risk assets like crypto. But that tailwind is flying directly into a native headwind, a huge wave of new token supply that could create intense selling pressure.
So, what's the one key takeaway when you put all these pieces on the board? What does it all mean?
It all comes down to this global tug-of-war. First, you have central banks pulling capital in opposite directions. Second, you have China's economic data acting as the potential tiebreaker. And third, you have specific markets like crypto fighting an internal battle between these global forces and their own unique pressures.
All of this sets the stage for a volatile period ahead. It leaves us with the one critical question that will define the market's next move. In this complex global tug-of-war, which side will be the first to lose its grip?